So welcome back to part 2 then of the best lessons, the top 10 lessons I believe every trader will need to adopt one way or another. So lesson number 6, wisdom number 6, simplicity and consistency. Now this for me is hands down the most important of the wisdoms. And simplicity I've always understood. I've understood this through being lucky enough to sit next to some of the best traders in particularly the proprietary industry, and just simply see how simply they can make substantial amounts of money. Now don't get me wrong, the skill set and the ability that they have adopted is immensely impressive, and they make it look easy. But in essence, when we break it down to what they're trying to do, it's highly simple. It's nothing complicated. Now, consistency, I believe, I've finally adopted and understood in its full in 2020. Now, it's not that I didn't understand what consistency was. It's not that I didn't know how to apply it. Remember what we said consistency is. It's this unconscious, automated process. It's something we do without thinking. It's habit. It's a part of who we are, and more importantly, it's a priority for us. Now, the reason why I believe simplicity and consistency to be so important is that there is an art in simplicity. And if you can manage to be simple, it unlocks tremendous doors. It's almost as if to say, if you can do the basics right, let's take a hypothetical example. If you can do the basics right in trading and maybe break even that pays your desk fees, suddenly when your really good trade comes along, you can put a little bit more risk on, okay? And that's what simplicity gives us. It gives us that ability to do other things, but only if we keep things simple. The same with consistency. When you are consistent, and only if you are consistent, okay, do certain doors open up? Are you capable of unlocking your true potential? Okay, if you cannot be consistent, and I don't mean consistent in your trading profits necessarily, but if you can't be consistent in your approach, in your processes, in your habits, the reality is you're never going to expose yourself to your true potential. Think about that for a second. It's only when you can be consistent that you will recognize your true potential. And that's the door that will be unlocked if you can achieve this concept called consistency. Now, the practical application, things I like to try from trading, from your trade journal. How often, go and get the number, how often do you find yourself missing easy trades? Or the trades you go, oh man, that's my bread and butter. What you're going to find is the simple answer is you probably miss it quite often. Right? And now that's that simplicity. It's you've got to make sure you do the simple things always and capture what they give you, because that opens up and unlocks doors. Go look at some of your strategies. How often do you get in at the perfect price, at the low or the high, and then all of a sudden you start thinking about trailing stops and start moving your stop around, or start thinking, oh, a buyer came in because the price action changed, and you overcomplicate the simple process. What are the results when you do that? Right? Do this exercise and you'll recognize that when you complicate something that should be simple, you're actually just doing yourself an injustice. Now, consistency. And this is something we're going to develop later on in this course. But go and calendarize something, anything, whatever it might be. Something basic. What time do you get to the office every single day? Write that number down every single day. Do it for a month. And go and see how much variance there is. How consistent are you getting to, the trading floor every day? How consistent are you in your eating habits, in your sleeping habits, in your whatever it might be? First, you need to recognize that you're not consistent. Okay, because if you can recognize it, then you'll be able to put in place certain measures. Now, we are going to develop a calendar, a trading calendar, as we get into part 4 of this course. And I'll show you through this tool how powerful consistency can be. Now, experience. What are you going to experience through being simple and consistent? Well, you're going to see the power of it. That's the reality. There is a power that comes from being simple and consistent. And you cannot begin to imagine how powerful it is. Remember what I said to you. I'm only just starting to see the power of consistency, and I've tried to be consistent for 7-8 years already. Right? So I'm only starting to unlock my true potential by being consistent. enhance performance. Okay, it goes without saying. The moment you keep things simple, the moment you opening up these doors and unlocking, your true powers, then you're going to start to see very, very, different enhanced performance. And also it unlocks these doors that you were previously unaware of. And that's the magic. Right? If you trust me on this one, when those magical doors start opening up, it truly is magic. Okay, you'll see things that you were unaware of. You'll understand things that you were oblivious to. Right? And that's the magic in simplicity and consistency. Now, the next lesson is trading as a career. And this is important. Okay, this is something that's quite personal to me. And where I was taught this lesson was when I first took up Ironman training, or when I wanted to become a triathlete in 2017, I adopted a coach. So I took on a coach. In fact, it was 2018. I took on a coach, and our first phone call, I said, look, man, this is the situation. I want to go to Kona, which is the pinnacle. That's the top of Ironman sport. And I want to be one of the top amateurs in the world. Right? And you've got 18 months to get me there. Now you can imagine my coach's response was, he didn't shoot me down, he didn't shoot down the ambition and the excitement, but he knew all along what was coming. He knew all along what the path was to get to that point. Now the reality is, if you don't see something from the onset as a career or a long journey, right, the reality is you're going to take unnecessary risks. You're going to do things that are unnatural. You're not going to follow a natural progression. Why? Because you're going to be forced into difficult situations in order to try and achieve what you think is an attainable goal. The reality is, if you see trading as a career, right? If I said to you, see this as a minimum 10-year journey with the potential to be 50 years, you're going to slow down. You're going to start to see that big picture of what a trader is and what it can be. Right? You're also going to set the right expectations. Now, I'm not saying don't be ambitious, you don't want to set limits on yourself. But what I'm saying is, you've got to set your expectations, not based necessarily on your imagination, but on what's realistic. Okay? Now, you need a number of years. For example, for my first 5 years, I just wanted to be a millionaire trader. I just wanted to make $1 million every day. It took me 5 years to recognize that, unfortunately, that's not how this game works. So you need to see the big picture and trading as a career rather than just a short term, let me give it a crack, make some money and get in, get out. Okay, it doesn't work that way. Now, as a practical application, write down your 20-year plan as a trader. Now, the trick here is you're going to find that actually you've never thought about a 20-year plan. Okay, I can tell you that you probably haven't thought about it because I haven't thought about it. In fact, I hadn't even thought about a 10-year plan. Right? When you do this, you're going to start to see that you've got very short-term expectations as a trader rather than the big picture. Now, don't be afraid to set that big picture. Don't be afraid to say, I want to be a hedge fund manager with 50 million under assets and I'm going to do it in a specific way. Right? There's nothing wrong with having audacious, crazy-ass goals. But make sure you set those goals over a long enough period, right? So that you're not limiting your ability to reach those goals. The second one, and this is a fun one, this is one that'll unlock a real aha moment, which is take a piece of paper, write down $10,000 on it. Right? I'd say most of the people listening to this course, that's, most traders will start a futures trading account around $10,000. Right? If you've got less than that, you should probably contact me so we can discuss what's a good starting balance. But the reality is double that amount. Okay? So we're at 20,000. Now double it another 19 times. And what I want you to think about as you're doubling it is, imagine every single year you take your trading account starting at 10,000 and you double it for 20 years. What number do you get to? I can tell you what the number is because I worked it out. Okay? The point of this exercise is that you'll start to see trading as a long-term game, as every year I want to double my account. Now a lot of you are going to say, oh, but that's not possible. Well, I beg to differ because I think it is possible. All right? So long as you're learning every year, so long as you increasing your risk, so long as you're following a methodical approach. And that's very important because when we get to the risk management tool side of things, I'm going to show you a tool that's going to help you to constantly be building that account, constantly be building yourself over a number of years, not over a couple of months. This is not a get rich game, unfortunately. All right? If you did get rich, You're probably in the ranks of John Paulson. Remember that guy who won the lottery but then didn't know when to quit? Okay, that's the reality. So the experience, what are you going to experience through having this sort of, seeing trading as a career? Well, number one, you're going to understand what's expected of you and your path ahead, right? You're going to set correct expectations. More importantly, you're going to start to develop a sense of trust and faith in your chosen path. And that's key, right? You've got to trust what you're doing. There's been many times in my career where I've been on efinancialcareers.com or LinkedIn jobs looking at other jobs. Why? Because sometimes I lose faith as well. I'm no different to you. But the reason I lost faith is because I've never set those expectations correctly for myself as a trader. Wisdom number 8. Understand your weaknesses practically, right? You cannot begin to solve a problem you haven't thought about, right? So if you don't understand what your weakness is, you can't solve it. Now, if you understand your weaknesses, you'll end up being able to solve that problem through the root cause. What do we mean by this? Okay, as a practical example, write out your problem. So think of a problem that you have, something that's constant. Now, I've done this exercise with the young grads at Ikiye before, so they know what I'm talking about. The important thing is write out something that you really struggle with. Risk management, moving your stops, whatever it might be, okay? Write every aspect of it down. Time of day, when it occurs, how it occurs, why it occurs, what you do in that situation. Write anything that comes to mind. Okay? Now go and pinpoint the root cause, and we call this the ripple effect, because very often when we look at a problem, we look at the end point. I lost $1,000 on this trade. That's the end point. Okay? We then look and say, I lost $1,000 because I had 10 lots on rather than the usual 3 lots. So we see the problem as I was trading too much size. When in actual fact, if we bring it through all the ripples, and the ripple is just imagine a ripple, a pond of ripple. In the middle you have the end outcome, but then as it spreads out, you go further and further, identifying each little element that got us to that $1,000 loss. Okay, so it was $1,000 loss, and the next ripple is the 10 lot I traded, and the next ripple is there was that economic data with that really important ledge level that I really liked, and the next level is I had 2 lots on for the break of that ledge, and the next level is the guy next to me also had the same trade on. Right? Suddenly what we start to recognize was it wasn't the 10 lot that lost me the $1,000. It was possibly something else. It was possibly maybe the guy next to me made me overconfident about the trade, and therefore I went from having a good position on in a position of power with my 2 lot to suddenly having 5 times that risk. And the moment I had that 5 times risk, my psychology went out the door. I panicked and I took a loss. Right? Notice the difference there. Notice the ripple effect. We have to identify the root cause, not what we think it is, but we can only do that when we go through all the steps, the ripple. So the experience of understanding your weaknesses, you'll solve problems that result in poor performances. Okay, that goes without saying. More importantly, you won't sabotage your confidence and trust. And this is massively important. I cannot iterate how important this is. Okay, if you sabotage yourself, in other words, if you take these big losses and you don't work on these and understand these weaknesses, it's like a case of you'll be taking 3 steps forward, but every time you'll go 3 steps back. Now, who on earth is going to be confident and trust themselves and be capable of building trust if they keep taking 3 steps forward, 3 steps back? Now, I'm not saying you can't take 3 steps forward, come 1 step back. Of course, you need to take steps back. But in order to build trust and confidence, you've got to manage those steps back. Okay? And you do that through understanding your weaknesses. Now, the wisdom number 9, comes from risk management. Okay, and I'll explain this to you in a minute. But control the controllables, all right, through process and automation. Now, a lot of people will do. Why you want to control the controllables? Very simple. Anything other is just a waste of time. Okay, if you're trying to control or trying to change what you can't control, you're wasting time. You're wasting thought. You're wasting energy. The reality is we've only got a limited amount of resources, whatever it might be, energy, time, money, whatever it might be. There's a number of different resources, okay? So when you're trying to use those resources to solve uncontrollable things, at the end of the day, You're not going to be any better for it because you cannot change the uncontrollables, right? So what do I want you to do? Go and list all of your trades or from your journal. And what I want you to do is go and write down in every single one of those trades, when was there what we call a controllable loss? In other words, when did you lose money because of something that was within your control? So, did you move a stop? Right? Did you use more size than expected? Did you trade outside of the normal hours that you used to? Did you enter a trade without an objective signal? Right? Once you do this, once you can recognize these were my losses that were controllable, in other words, had I not moved the stop, I wouldn't have taken this loss, versus, okay, this was a trade, I followed the rules, and it just got stopped. What you're going to start to see ultimately, okay, is you're going to be able to differentiate what's in your control and what's out of your control. But also, once you know what's within your control, you can start to develop processes, systems, automation to make sure you're always controlling those things in the right way. For example, if you're supposed to trade one lot because that's the risk you're used to, sometimes you might trade 3 lots or 4 lots or 5 lots. This is a controllable mistake. But what happens if you had a risk management tool that said, Brannigan, today you trade 1 lot. And if you don't, if you click 2 lots, it shouts at you, says, hey Brannigan, you're trading 2 lots. You're over risking. So we create these tools. We make processes and we automate certain things so that we can control what we can control, and the things we can't control, guess what? We don't even bother giving them any time and energy and resource, because what's the point? You cannot control them and you never will control them. Okay? So we develop a process to avoid repeating the loss. That's ultimately the practical application. You take those controllable losses, okay? You go and develop a process to avoid a repeat of that loss. Now, what you're going to experience when you do this is you're going to learn to differentiate between what is within your control and what isn't. And that's important. Most people don't know the difference. They don't know what's controllable, what's not controllable. Right? The market hitting your stop, over an economic data piece, that's not within your control. The market will move whichever way it wants. You moving your stop, that is within your control. And then more importantly, you're going to learn to direct your resources smartly toward process and development. Okay, again, remember we spoke about resource allocation. Don't utilize them and give them to uncontrollable things. Give your energy, give your mind toward things that can ultimately help you develop processes and automation, and at the end of the day, move you in the right direction. Wisdom number 10. The edge is in the application of the strategy. Now, you're going to hear me use this a lot throughout part 3 and 4 of this course. A strategy is nothing without a strategic entry point. Okay, so what we mean by this in a simple sense, a lot of traders have got good ideas. They've got good potential pattern plays. But what they don't have is the ability, okay, to apply themselves correctly to that strategy. Now, we can all look at a chart. We can all look, for example, we can all look at a breakout level and see the resistance and see the potential for breakout and see the potential for momentum. We can all see it, okay? In fact, every market participant around the world can see it. We're no special, right? We don't know anything advanced over everyone else. We all see the same thing. The difference is we don't all apply ourselves in the same way to that strategy, right? And that's the art form. That's the edge. The edge is how you apply yourself to what everyone else is seeing, right? Because we all apply ourselves in different ways. For example, someone at Goldman Sachs might buy the breakout with momentum with a 1% stop. Okay, so they risk 1% of a portfolio and they're looking for a 4, 5, 6% move. Why? Because this is a price discovery move, it's a breakout, and they expect a really good momentum rally from it. Me, Brannigan Barrett, I might just be playing for the stops, in which case, as soon as the stops are triggered, within seconds, I'm out of the trade. You might find someone else that's looking just purely for a day trade, a pure swing day trade. The moment the volume spikes above a certain number, they buy it, and the moment the market stops one time framing on a half an hour chart, they get out. Right? So everyone is applying themselves to the same idea, but differently. And it's that application where the edge is. Okay. Now, why do we think the edge is the application of the strategy? Well, edge is a lot simpler than what it's made to be, right? People seem to think edge is this holy grail definable thing. It isn't. Okay. Edge is just it's an application. It's how you apply yourself. So you need to be able to apply yourself in the most impactful way, and that's the important word here. Your application must be impactful to get the best results. Now, a practical application. take your strategy you've got now, whichever one, take any one. And what I want you to do is optimize the entry point. Right? So play around with where you enter on it. Let's go back to that example of a breakout. Right? Sometimes people enter only once it's beyond the level. How about if I said to you, preempt it and enter once you get a certain amount of volume before the level? How about only getting once it's broken out for at least 1 hour and then enter? And go and look at the different results. Look at the different permutations if you entered before, if you entered just after, and if you entered after a certain amount of time. The results is you're going to start to see completely different risk-reward profiles, and you're going to start to see very different potential. None of those three are wrong. Not one of them is wrong. They are just different applications. Right? And that's what you have to start to recognize, that there's an endless number of potential successful and unsuccessful permutations. Your goal as a trader is not to change the strategy, is to change your application to the most impactful approach. Now, what you're going to experience when you do this, you're going to start to approach the markets very differently. You're going to start to see things very differently, and you're going to start to observe opportunity rather than this holy grail looking for the ultimate strategy. Right? You're going to start to have a strategy, but then apply yourself differently. You're not going to give up on that strategy just because it's not generating revenue. So you'll find ways ultimately to profit rather than see a trader's success or failure. And that's important. Right? You're going to start to see your strategy as what it is. It's just a strategy. And you're going to start to recognize the power in applying yourself effectively within that strategy. Okay, guys, that's now the end of lesson 4. And we're now going to move on to your prescribed drills.